Yo, what's going on YouTube? J Clem here, back with another banger. Now, what we're going over today is how to catch sniper entries, how we can be catching the top of these moves. I'm specifically going to be going over counter trend trades today. Yeah, so let's get into the video. Now, first of all, what we need to have a good understanding of is market structure, right? Because if you don't understand market structure, you might obviously think that this is a buy side market. We get that break of structure here. You don't realize you try buying at some demand level here, only for it to give a reaction and continue on after mitigating out of this sell and smash you, because obviously the sentiment has changed. We gave that shift in order flow here, that shift in trend. Yeah, and essentially, taking you out of the market pretty much. So if you don't understand market structure, I've got a video on that, so you can check out that. But without further ado, let's get into it. So first of all, as you can see on Euro USD, right, we are considerably bullish. We have this break of structure here, big impulse. So we want to look to potentially catch the pullback before maybe pulling into a specific range down here to obviously then continue it long. So let's just go down to the 15-minute time frame and see what we have. We can see obviously this was the CPI news release. It's the start of the year, so price action has been messy. It's not been nice, but there's still opportunities in the market. So of course, we are bullish. Now, just because we're bullish doesn't mean that you should be buying, for example, trying to buy this or trying to buy up here, because ultimately, you're going to get stopped out of the market. Now, what we need to do, especially when trading counter trend, is wait for that shift in order flow. So here, right, you might say, well, why can't I short this level? Well, one, we never took out a demand level down here, right? So we are still bullish. It's still a buy side market because no sellers have been taken out of the market. You see this big sell candle here, sell to buy, right? We never took out that range. We respected it and impulsed up. Okay, so number one, especially when trading counter trend, is we need to wait for buyers to be taken out of the market, right? Which we see here. We have a sell and a buy, right? We take the high, which gives us a new structural low, which then ultimately fails. So at this point in time, we can clearly see that sellers have taken control of the market, even if it's just for a short amount of time, which is all that's needed to catch these counter trend moves. As we can see, this yielded 80 pips. So there is definitely good risk to rewards in here. So after we obviously get this shift in sentiment, right, sellers have taken control. Now, there's a very specific reason as to why you don't want to choose this as your POI, as your order block. And the reason for that is this is the first point of liquidity within this range, right? This is our range, buy to sell. So we have our trading range here, right? Now, there's no point of liquidity in this range. It's just a big sell candle, just loads of imbalance. So usually what's going to happen is it will use the first high or low within the range as inducement for that higher level, which we can clearly see here is unmitigated. Exactly what we want to see, right? This is a A1 counter trend setup for me. So right, let's start breaking this down. Now, how do we refine this down to obviously get those sniper entries? As you can see, this is a fairly large zone, 10 pips. We want to refine that down so obviously we can get those sniper entries. So let us just take price back to here. Perfect. So now let's go down to the lower time frame. Obviously, right, we can see this is our big impulsive move. Now, price will usually consolidate back, nice and corrective into our area. But once we get to our area, we want to see a hard run in. right? We want to see a hard run in and a hard run out, confirming, that there's interest, that there's selling pressure up here, there's filled orders in this level. So this is super clean, right? It's a buy to sell engulfed candlestick. So let's break this down on the lower time frames. Now, if we see this, we can clearly see, right, this was a large run on liquidity, a large manipulation by obviously the institutions. Look at this. Like, it's not often that you see impulses like this so high in the leg. Usually the impulses happen down here. You see, you get that impulse, that impulsive move at the highs. Up here, you don't usually see that. So that's the first indication to me that obviously there's institutional interest in this level. We get that hard impulse, right? We just wick this high and another hard retrace here. Now, where does the actual momentum kick in? Like, yes, we have our big candles here, but look at this, a massive sell candle, right? Clearly that there's some interest that came into the market, some orders that came into the market here. So like I said, right, we don't want to be trading off this because this is our first point of liquidity in the range on our 15-minute time frame. And look at how clean this pushes, right? If this was something like, this, okay, maybe what we would see is a correction back up into here, give us that shift, because we have inducement here for obviously this level. Now, as you can see, we don't have that. It's a very clean push. So perfect signs that obviously this is going to be used as liquidity to obviously fuel our move from this area. So let's just go back to the lower time frames. As you can see, right, we are consolidating back, nice and slowly, just what we want, building that liquidity for us to absolutely run through, mitigating out of these orders here so that there's no unfilled orders left in this area. So once we tap into this level, we can just absolutely melt because there's nothing here that's going to act as like a form of resistance to price. Yeah, that's like the theory of it anyway. So as you can see, right, we have this super refined level. Let's see how big this is. It's 2 pips. So I personally wouldn't set a limit on that. Some people would. There's nothing wrong with setting a limit here. It's pretty much the extreme. It's up to you guys, but I obviously like to wait for a little bit more confirmation. So what do we get here? Look at that. Perfect, beautiful, hard run in to our obviously area of interest. Now, what do we need to wait for? We need to wait for buyers to be taken out of the market to show us that obviously the lower time frames have given us that shift in trend. As you can see, we don't want to be looking to sell here. In actual fact, you don't even really want to be on the lower time frames until we hit, our perfect area of interest, because you can just take unnecessary losses. You see, you might think, okay, we've got this big rejection candle here. I'm going to try sell from here, right? But ultimately, we just respect this previous demand level and, continue to push higher. So we do want to wait for obviously that shift in the lower time frame trend, just like here, right? We waited for that shift in the mid time frame 15-minute trend, right? Markets are fractal. The same thing happens over and over again. So we can apply these concepts to every time frame. What do we see here? Okay, beautiful, beautiful. Oh, I'll just take that back a little bit. So this is exactly what we want to see, right? This is lovely. We have obviously, here, right, we are bullish on the lower time frames, and we just take out that last higher low, right, showing us that sellers have now taken control of the lower time frames as well, which is great, right? Now, do we have inducement? We don't have a form of in-range inducement because we do have this inside bar, but you see this is outside of the range. So why is it outside of the range, and why can we still use it? Now, it's outside of the range because obviously you see this wick took the low, and then obviously we pulled back, created this inside bar. Now, inside bars, what do we know about inside bars? They are obviously ranges on lower time frames, so they can be used, as really good forms of liquidity / inducement. Now, what am I looking for here? I'm looking for obviously that last sell to buy, which is where I want to get involved, which we have here. So this is sort of my area of interest at this moment in time, my POI. And as you can see, there's a lot of interest at this level. So let's say we get in short here, 3 pip stop, absolutely lovely. And personally for me, where am I likely to hold this to? Now, I like big trades. I like holding trades because I understand the logic of the market, and I know that more than likely this low isn't going to hold, right? Look how it formed. It formed absolutely horrendously. There's no run on liquidity within this low, so there's no way in hell that price is going to bounce off of this and give us a new lower high from here. More than likely, we're building liquidity. We're trapping buyers, right? Because obviously there's buy side orders here. Stop losses placed, and also we have those sell stops for obviously when price goes for those sells to be triggered. Now, let's see what happens. Okay, so a logical target, before we get into that, a logical target for me, what I like to do, I like to use premium and discount. So this is our last push for this. I am going to select 70/30 EQ. Here seems logical, it's the EQ of this push. This would give us a nice 1 to 15. Where am I going to break even? I would break even when that internal low goes here, right? So we can then obviously roll our stops to break even and play this trade out straight to take profit. Absolutely lovely. Look at that. Perfect. Now, like I said, this is a counter trend trade. You obviously want to focus on taking those pro trend trades, but counter trend trades, they can pay off nicely. You just need to have conservative targets for these. You won't get those massive trades usually on counter trend trades. 15R, is good enough. So let's see then what happens down here. What do we do? Okay, we are ranging. We give a nice impulse up. So right, let's see what we've got down here. Maybe we can catch the pro trend move, right? So originally, right, there's nothing too clean, right, to trade off in this leg. So the best thing to do is wait for obviously 15 minute to give us that shift in order flow again, where we can then look to obviously take the market long from there. Because there's nothing clean. Yeah, we can break this down on the lower time frames and say like, okay, on the 1M time frame, we have, okay, look, we've got demand here, demand, right? But we want to be trading from minimum like 15-minute demand, which there's nothing too clean here. So in order to counteract that, it's best to wait for obviously that 15M shift in order flow. Now we have fresh M15 demand where we can look to obviously trade that. So what are we looking for? We're looking for this high here to go, right? So we can go down to our lower time frame and we can see what happens here. So we get that shift in 15M, and what am I looking for here? So let's see what we do. Okay, so Our lower time frame is bearish here, right? Oh, we pull back there. We go bullish here, right? We have a run on liquidity there, and then we break that high, right? Giving us this internal structure. Now, obviously, when this goes, this gives us a 15-minute shift, right? So I think potentially this low could be used as inducement. So I like the look of this area potentially below this low for a potential entry. But we do have an inside bar here, so we could go long off here. Let's see. I'd be more inclined to play an aggressive entry down here, and a more conservative entry here. Okay, so we do go long off there. Maybe miss this trade. Yeah, you see. And do we come back? And it looks like this low is going to fail us. Yeah, there we go. This is why, obviously, you want to be waiting for a decent level in the market to be hit. But now that's great, right? We didn't take a loss there. You know, we were logical about the trade, because obviously we don't set limits. Well, I don't personally set limits. I market execute. Like I said, I'd have been conservative here if we had a shift in the lower time frame order flow away from here, but we didn't. Maybe you got in there, but again, it just doesn't look right for me. And obviously this was the level I wanted, which just got absolutely smashed through. So that's fine, you know, you save yourself from a loss. So let's see what happens here. This is actually a great benefit. We can see that obviously we've had another trap. Traders have been trapped in the market and liquidated. So let's just play price on. I haven't actually, gone over this price action yet, so I'm just doing this with you. Oh, look at that reaction. So when we see a reaction like that, which is from obviously the origin of the move, as you can see, right, this is the origin of that impulse, like I said up here, right, where we had that run, that impulse, and we came back into the origin here for that sell-off. We come right into a decent demand level. So what we can now do, especially seeing that intent in the market there and it being pro trend, we can drop down to our lower time frames. Oh, if I just take price back here, let's see what the lower time frame does. Let's go to the 5M, just play price on, drop down to the M1. So you can see, right, we've had a shift in order flow, right? We've got a low and a high, but there's been no transaction yet, right? This is a very clean demand level, but we haven't seen any sell orders absorbed. What happens when sell orders get absorbed, right, is we see that absorption like this, right, which then gives us a nice demand level. With those clearly absorbed sell orders from this previous high. And we don't get that here. So I'd be skeptical again to take a trade from here. Okay, now what we're seeing is we've got that major shift in the lower time frame order flow. And we've had that absorption, right, twice. So I would definitely be interested in potentially this demand level here. And now that we've obviously seen that absorption, this does obviously validate down here, which, it's very clean. So obviously, let's see what happens. And obviously this level here, right, we've got this level just above as a nice bit of inducement. So if we tap in here, give a favorable reaction, just like that, perfect, a nice, beautiful reaction, obviously on that lower time frame, just what we want to see. Getting on the retest here, 3.5 pip stop, and where are we targeting? I would say, I'd have the confidence to hold this all the way to the high, potentially hedging it, but it's pro trend, so there's no reason why this shouldn't pop the high, to be honest. Let's just see about our pricing. Where are we priced within our last push? We're trading as well from the lower 30%, so this is a very high probability trade to hold to the high. So let's just see how obviously the lower time frames play out. Nice, look at that. You wouldn't have gone break even there yet because we never had that lower time frame break of structure after our entry, which would obviously be this high. So as soon as this high goes, you roll your stops to break even. So that's good. We do come in to obviously take these just lows here, see the two inside bars, two like little lower time frame ranges, run those and pop a gain. So even the opportunity to get on a scale in here, but we will be conservative and say that we didn't. And let's see how this plays out overall. And obviously into market close, and this is where we ended up. So you see, when you do get in at these good levels, the market does respect these areas. As you see, it is pro trend. So what we can also see, is the opportunity for another scaling. See here, we have those stacking of the orders again before obviously that impulsive move. We then return back to that origin. It's always that origin move, right? We return back to the origin. We do still have this level here, but there's no interaction here, right? There's no battle between buyers and sellers here, right? You see here, right? We have this. This is like a larger sort of area of supply, right? This is a buy for a sell, and before we manage to obviously break out this high, we have this stacking of the orders, this battle between obviously the sellers who are selling here and the buyers who want to obviously push price through here, and we come back to obviously that origin so that we can refill the missed orders to obviously then continue the push up. See, and when you are pro trend, we have that shift in order flow here. There's another entry there. Yeah. Anyway, I hope that makes sense. As always, if there's anything you didn't understand, just at me in the comments below and we'll go from there.